We're waiting for all of these big IPOs, potentially early next year. Uber, Lyft, Slack, Airbnb. If this market conditions like this continue, will those IPOs happen as planned?
We think they will. We think there's going to be a great market next year for U.S. IPOs and global IPOs. And certainly there's been a little bit of temperament in the market today, but we feel that the underlying growth in the U.S. market, and we feel that given all of the M&A and LBO activity that's occurred over the last year, which has taken a lot of capital out of the markets, we see portfolio managers looking for good, solid, strong tech IPOs.
Alex, does that echo what you're hearing?
It does, and it's curious because, and Gary and I have spoken about this, with these big tech companies selling off, sometimes folks are looking for other places to find growth and new companies to find growth. I am curious though, Gary, you oversee IPOs, you also work on the M&A advisory side. A sell-off, potentially good for potential buyers looking to buy assets as well. Qualtrics was just bought right before it listed this month. Does this kind of sell-off make good moves for potential acquirers? Will the M&A market also come back strong?
It will. It will. So we see a lot of strategic interest right now amongst all of these, these terrific private companies. And there's a huge appetite on the large strategic side to buy growth, to buy technology, to buy innovation. And they've had the benefit of tax reform this year, so there's a lot of cash in their coffers. You combine that with the fact that a little bit of a sell-off reduces the multiples in the space, and that's generally a good thing for M&A.
So is this more of a positive for the IPO market or the M&A market having a little bit of valuation, maybe realism, as some of the skeptics might say?
I think on balance it's a little better for the M&A market, but it still does not do anything of harm, we think, to the IPO market as well.
Do you think that valuations will stand up? You know, bankers are shopping Uber at $120 billion valuation, Slack $10 billion, Airbnb $30+ billion. Do the valuations hold?
We think they hold for selective assets. I mean, I think valuations overall over the next year you could see coming down marginally, but for the select assets, these are very unique companies, and they offer very unique entry points in the markets. Their growth is generally very, very good. And so there's always been a special premium for companies like those.
I'm curious, when you do think about kind of the Silicon Valley groupthink a couple of years back, IPO was a scary perspective. Folks said, there's all this cash in private hands, why don't we just take it? SoftBank is now here with a lot more cash, and yet a lot of these consumer tech companies are saying it's time. How are management teams kind of squaring this idea of taking public capital versus also staying private for longer?
Well, you certainly see a trend over the last 5 years where management teams and boards of technology companies have stayed private much longer. It's been a lot easier for them. There's just an enormous amount of private capital in the world that they can take, and they can take generally at slightly higher valuations to public valuations, and they don't have to go through the exercise of the IPO. So for many, it's been a way to build their companies to ever more mass, to attract talent to the organization, and to really build these behemoths that we're seeing in technology today.
So map out 2019 for us when it comes to IPOs and tech M&A. What do you see?
I see several very good tech IPOs next year. I see another class beneath that are still very good companies, but quite a bit smaller. So I think you'll see on the order of 50 or more good tech IPOs.
That's more than this year.
That's a little more than this year. And then in terms of M&A, I think you'll continue to see large strategics who are looking for growth, who are well capitalized, purchase some of these companies as they move on their route towards the IPO.